Welcome traders. So I'm doing this one a little bit early. I'm doing it on a Saturday, and please excuse me, there is a fan on in the background, so if you hear a sort of a low level hum, that's what that is. But of course it is very hot in the UK at the moment. So first of all, let's have a quick look at the economic calendar for the week ahead. I haven't highlighted anything because they're all sort of equally the same. None of these to me strike me as anything other than crucial or urgent, anything that could be crucial or urgent, and anything that other than just high impact news that could disrupt the market. So for the most part, I'd be keeping an eye out. If I was engaging on any of these pairs, I'd keep an eye out just around, especially for day trading purposes. But generally speaking, most of these are going to happen in the US session, not in the early morning session, and therefore day traders are probably going to be aware of that. So there's nothing here that I think that we need to especially be concerned about or pay attention to, that other than the fact that it'll just spike the market. So that being said, I also want to have a look at what else is going on in the world very quickly. So as you may, and this is I'm recording this within 24 hours of this happening, as you may or may not be aware, there is a a military coup happening in Russia at the moment, and it is unfolding. It's a very fluid situation, so the outcome of this is difficult to predict. So I'm going to just quickly give you, if you're not aware of it, I'm going to quickly give you an introduction to it, and then we'll talk about what it could potentially mean for the markets when the markets open next week. So essentially what happened is, to keep it very, very simple, while Putin has been invading Ukraine, he's also employed a mercenary group by the name of Wagner. They have become tired of the conditions under which they're working, and they have decided to turn on Putin. That's essentially it. They are now attempting to, let's call it, invade Moscow. And the outcome of this is, as I said, is very, we're not really sure of how this is going to happen. There's lots of private jets leaving, and there's a lot of drama going on. And if you're not aware of how important this is to global events, you need to kind of brush up to speed on this, and definitely keep an eye out for what is happening as close to real time as you can. This will have implications to what is going to happen with the ongoing war in Ukraine. This is going to impact Belarus, which is a previous story. It's also going to impact Crimea, and we could see potentially, there is the possibility here that we could see some positive repercussions for this for democratic countries as well. So there's definitely going to be a ripple effect of this. We'll see, depending on what the outcome is, but it certainly doesn't bode well for Putin, because this wouldn't be happening if the opinion is that this wouldn't be happening if the leadership in Russia was in control. So this is definitely a once in a lifetime type of experience, and we need to be aware this has massive implications. However, not necessarily for the market. So let me explain my thinking. First of all, when Russia invaded Ukraine, we saw what that did to the market. There was a spike in crude oil. We also then know that there were some potential knock-on effects, for example, for wheat and a few other things that impacted sunflower oil, for example, that comes out of Ukraine. So actually what's interesting here is that if we see, and so let's just talk about what's going to happen in the coming week. This is going to be more of a change in administration. That's a very kind of not a silly way to put it, but a very sort of dry way of putting it. This could result in a change of administration in Russia, and it's something that has been potentially on the cards brewing for a while, because by the time you get to the stage, it's been brewing for a while, probably for about 2 months. And the fact is that productivity is really what's going to impact the markets. Do we have, is there going to be a release of some new content, or are we going to see a holdup of certain things? So if we look here on the CIA fact book, if you're not familiar with this website, it's a very good one. And so this will tell us, for example, we can see what the agricultural products are in Russia. We've got wheat, sugar beets, milk, potatoes, barley, sunflower seed, maize, poultry, oats, and soybeans. Unlikely to see sanctions lifted until Russia exits Ukraine. So we're not going to see much change there. In terms of industries, a lot of commodities, and so we could see possibly some holdups in some of these. But since the invasion into Ukraine, there have been all kinds of sanctions imposed. In other words, my point here is that we're unlikely to feel or see any noticeable change this coming week, possibly because most of that stuff's already happened. In other words, Russia's already being sanctioned, and we're not going to necessarily feel any disruption on all of these that is going to be that different on Monday that wasn't already the case on Friday. Okay, so and even just going on, I'm not really sure what's going to happen with the ruble, but again, I'm not expecting I'm not expecting anyone from NATO to start engaging with Russia on Monday. Not really looking to see what's going to be the case there. But remember, I'm recording this on Saturday, where likely these events will be unfolding before Monday. Almost certainly there will be either a standoff or a possible change, possibly Putin will be ousted or there'll be some sort of agreement. And this is likely to happen before the markets open on Monday. It's not guaranteed, but it has a high probability, seeing as there's already activity happening in Moscow. There's also rumors that, and there's a lot of misinformation, and there's also rumors that Putin is moving around. Okay, so those are things we need to just be aware this can happen. I can't really see at this time how that could potentially impact the rest of the markets, because it doesn't. There's nothing there. Most of it should be good if there is a change in that kind of regime. We'll see how that goes. Okay, or at least a temporarily good. It'll be one exchanging one warlord for another. So we'll see how that goes, or one dictator for another. We'll have to see how it goes. Okay, so moving on, let's just have a very quick look at the VIX. It's still relatively low. We might see a minor spike on this. We'll have to see how that goes. If we look at the dollar index, what I do want to highlight here is we had a little bit of a double bottom last week, and we actually finished with a stronger dollar. Okay, so what I think we're likely to do now is to encounter range-like type of ability, because we had a trend to the upside, then we had a trend to the downside, and now we shifted back to the upside. So basically we're ping-ponging. If you look at it from a monthly basis, you can see we're just sort of moving around in that area. So if I quickly talk about euro-dollar's uptrend has been broken. It is at a major level of resistance, and so this week the question is going to be, is it going to continue up? And so what I will be watching as a trader is a break below the low of last week's candle, or a break above the high. Those are the boundaries of what I need to be keeping an eye on as a trader, because that is really where the implication is. And until it breaks above or below, there is no real clear trend, and therefore I need to just be aware of that. Sterling, for me, is very interesting. We have a pretty strong uptrend there. We have pulled back to this level of support, and therefore we could produce a continuation to the upside. However, this looks a little bit more like a stronger rejection on the weekly there that could ultimately result in a deeper push back down towards, say, 1.25. So there are two potential outcomes here, where we find support and carry on, or we see another move back down towards 1.25. Okay. Similarly, if we look at, say, Aussie dollar, we can see they've been knocked down. That's very strong move by the US dollar. We've got an inside bearish candle here on Kiwi. So all the trends that were setting up last week just got knocked out of the water on Thursday and Friday. Thursdays are very interesting. Thursdays can often change whatever the existing trend is, or at least that has been my experience for the majority of this year so far. Excuse me. Dollar yen pairs continuing to push higher. Okay, so the yen pairs are still on my watch list for the best sort of trading opportunities. But again, we even had in the last week, we had some of these fail. So Aussie yen and Kiwi yen resulted in losing trades for myself as well, just because they were outside bearish candles. We've got a couple here, say, for example, pound yen looks particularly good, but euro yen also experienced a little bit of a spike there, so got stopped out of that one as well. So there's some mixed results there, but overall the trend does still appear to be intact, and those currency pairs are still my favorites for the time being. Okay, then having a very quick look at gold. Gold has broken down into this area. However, for me, we now have a confirmed downtrend on the weekly, lower highs, lower lows. We're in an area where it could potentially find support. So what I'm looking for now is to see how that it'll attempt to move down to 1900, and then how it's going to react at that level. Will we get a very strong rejection? A lot of buyers stepping in there, but it certainly has broken through this level. It is now somewhat bearish, but the question really remains is how far can it continue down? And I'm not really expecting it at this time, not expecting it to go as far as 1800, but certainly down towards 1900. Silver, if I compare it, silver's certainly looking weaker in comparison. And again, it's approaching $22. I want to see if it does manage to find some support there. Natural gas looks very good. This is one of the ones I spoke about last week. Really looking for a pullback. Got a very nice pullback here and have continued to move this. Now we've got a sort of a very messy inverted head and shoulders, but I'm expecting to see if it can break through this level of resistance, which has been supported in the past, and my expectation is it will continue to move higher. For this last weekend, for a very long period of time, we've seen crude oil, crude oil sitting in a range, and at this time, I don't really expect it to go anywhere just yet. Maybe, possibly, because of the uncertainty, we could see a demand for oil move to the upside. But because of the sanctions, I'd be surprised. There might be some calculations that if a new group comes into power, that there could be some type of, then there isn't necessarily a negotiated solution down the line. There could be a concern, and therefore we see a spike to the upside. Unfortunately, it's one of those things that's just very difficult to predict, and is not really a trader's job to predict the unpredictable. So this last week I was looking at the global indices. And one of the issues was that although we had a very nice potential bullish continuation, and I'm still of the opinion we're in a bull market, we had some interesting weekly markets where there was a potential change in weekly direction. Let's see if I can show you here as an example. So we had a couple of ones where weekly candles were forming here, and we are a little bit overextended on the weekly, and therefore we could have seen, we could see here the potential for a weekly correction. And so what happened on Friday? So again, I had a couple of trades that I reduced my risk on them, and then still opted to take them. But I had a couple of trades where I was triggered in and stopped out simply because we're coming into a level of resistance on a few of these. Overall, I still expect this to continue to the upside for now, but it looks as though we're going to go into a bit more of a retracement. So this week I am going to be prepared. So this was a very nice, very clean, simple bullish setup. This is why the question mark is here, because I do market analysis during the week. For my guys, and this I was highlighting that the possible outcomes actually ordinarily we could see, because of we were forming a bearish candle there, that we could see a correction, and we did. That was one of the possibilities, but this would have been in isolation under other circumstances. If this was not as overextended, then I would have expected it to be bullish and continue. NASDAQ as well. Excuse me, I'm looking for this to possibly, if we're going to continue through and follow through on this, I'm looking for this to come down towards these previous levels of support for now. So something to be that I will be prepared for as a possibility this coming week. You can see here the Russell coming back down into this level of resistance. I don't want to see if it finds some support here, or if it breaks through, it needs to come back down to the next level below that. My dog is trying to decide whether to get into the swimming pool or not. The FTSE here having quite a big bearish close for the week, and I would mention that it's closing below that 50-period moving average. Okay, so it's definitely on a potential trajectory here to head lower. At this time, I would just put it down to the next support level. All right, strong rejection there, multiple failure attempts here. A little bit of bearish divergence here, so there's a lot of possibility here that there could be a bit more of, or at least a deeper correction way down, possibly even as far as 7,000 for the time being. Then we have the DAX, which also failed to take its setup there. I've highlighted during the last week some bearish divergence there. We've also got a bit of a double top here, kind of very similar highs and a deep close, sort of a bearish momentum candle, and a failure at this level. All right, so this week I think it best strategically to wait for a deeper correction. I'm okay with some of this because if you are building a stocks portfolio, some of these markets have become very hot very quickly, and it would be nice to see them have a deep correction. Okay, so just looking here at the ASX, you know, sitting a little bit still close to all-time highs, still not doing too badly here, but a deeper correction. So I think this week there's a very real possibility you could see the markets head a little bit lower. And Nikkei as well. Nikkei overall, this is a great example of it. We've had so much activity here. We really do need a correction. And so this is something that could potentially last a couple of weeks before returning back into a longer term uptrend. Okay, so when I say that I'm of the opinion we're in a bull market, I am still of that opinion at this time. But I also think that a lot of the markets have become overextended. And even as we go through a bull market over the next, let's just say 10 years, there are going to be months where we have very big corrections. And the corrections are always scary. But we need them because otherwise there aren't buying opportunities in a bull market. So let's have a look at some of the stocks quickly and see which one's catching my eye for now. So looking at Apple, for example, looks very, very nice and healthy. I really, really like this, but that weekly at some point does need to do a bit of a pullback, and it would be a small one. It's not really a big pullback required to come back down towards sort of 177. And so that would be welcome. I think that would be very well received. We can also see if we look at Amazon, for example, we're starting to pick up showing some depletion here at the top of these candles, and a bit of a correction down here would also be very welcome. ARC Innovation, so very much highlighting this sort of breakout of this area, and it's come up into a level of resistance at a pullback. So for me, my expectation here is to see it sort of come back into these old highs into this area and find some support. And this sort of hints at or applies at a week's worth of correction. So possibly we could just get a single week's worth of very big corrections across the market, and that would be cool if that's the case. Another example here would be Berkshire Hathaway. It's managed to break out of this consolidation a little bit higher, has produced a bit of a bearish, let's call it spinning top candle, and just to pull back into these sort of lows back into this area. Okay, but within that monthly trend, it still looks relatively bullish, no doubt. So the question is, does it just want to come back and test this level of support? We will see. And I think worthwhile mentioning that Adidas has managed to break out through its level of resistance, still seems to be at that level, and for the most part, this looks very nice and healthy. So not all of these, not all the individual stocks are looking bearish, so that's also a positive sign. Meta again continues to just look incredibly stable. This is ridiculous because this is almost institutional buying. It's just marching soldiers, very regimented, very methodical, and definitely would be nice to see a correction, but there's just no signs of weakness. Not really. There's a little bit of bearish divergence here, but then even again, it's looking to recover. So I expect it to continue to push up a little bit, at least here towards 300. And then talk a little bit about NVIDIA here. So, excuse me, I've highlighted this danger zone that I don't expect. I think it's overrun. I think it could be very nice and overextended here. But also, what I have done is change it from last week to sort of it ended about 450. I've pushed it up to around about 500. We could see a thrust up to there, but certainly I would say that now the risk of me getting in as an investor is a little bit too high for me. I'd love to see this pull back to these old highs here, and this is not unreasonable at all, down even as far as 200. That would be a big correction to the downside, but for me, I would also see that as a potential entry opportunity there. And actually anywhere in between, which at this time, by the way, is another green candle. So for me, I'm out of this as an investor, as a trader, not really seeing any opportunity just yet. And this could be something, by the way, that could unfold over the next 6 months. It's not going to be a quick thing. It's going to take months and months. This is where there could be 2 or 3 months of bullish candles before it starts to fail and then starts to come out. My highlighting this area is really just to highlight that it is definitely peaking. And when I say peaking, it's in the second half of its move, and if you look at its entire history, this is one of the most extreme kind of moves that it's ever had. It's gone parabolic. Parabolic means it can go silly. It can go just like up to here, 600, up to 700. However, if it doesn't do anything absolutely crazy or unheard of like that, this would be a really good area for it to run out of steam. And in fact, I'll probably know more as I see the end of the of June and July's candles. One more thing before I forget, because I could do a separate video on this, but I recently did a video about the Case-Shiller Index, which is the fear of a market housing crisis bubble, and therefore a bit of a burst, because the reason I spoke about it in the video was because the moving averages had begun to cross over, and historically they have only really done that kind of once since 2007, and that was obviously the beginning of the 2007-2009 global financial crisis. Okay, so the reason I bring it up is we did cross over to the downside, but we have crossed back over to the upside here, and we might possibly at least have put this off for the time being. So I'll probably start to include this in my analysis if we cross over a line again, because rather than doing a separate video on it, but at the same time just letting you know that I do kind of watch it. We seem to have kind of had a nice little bit of a correction. Prices come back effectively into the 10 and 20 moving averages, which is a good area for it to turn around, and it does potentially now want to do it. So the whole point of the video was to talk about, because the moving averages have only ever done it once and they crossed over now, could that signal that we were going to see a correction in that area? So it seems to me that overall most of the markets are relatively strong, but there might be bubbles in specific areas, and that isn't necessarily a sign of, oh my lord, the whole sky is going to fall, the sky is going to fall and we're all in trouble. It doesn't necessarily mean that. We're not in the same state that we were in 2007. We do not have those problems, despite what some of the kind of pundits on YouTube are telling you. So just wanted to mention that, and it seems for the time being we sort of cross back over. It's a very slow kind of an indicator, and if it does change, of course, you'll hear about it here first. Okay, let's go and have a look at a few others. Netflix looking nice and bullish. PayPal, that looks good here. There was one that I was really lucky to see it break out to the upside here. We've got Spider. No, all of these not really, nothing fancy here. The one that I did want to talk about a little bit is, of course, Tesla. But Tesla, again, has had a big move. A nice little... so we could see a little bit of an indecision candle here and see the market pull back a little bit, back down towards, say, 208. As far as 200, I'm not really sure if that would be the case, but certainly to touch on this and then continue to the upside would work incredibly well. Even if it didn't do that, I would still expect it to come back down in towards the 210, 225, 210, 220 level. And the biggest winners over the last week have been the cryptos. They've really burst through this. I wanted to keep this level here. I can remove it now, but I really wanted to just highlight how really nice and strong and how well they have performed. They still look good. There is a major level of 30,000 we need to see it get through, but this is a good start for that. It's a little bit weak now. It's overextended. So ideally this week there'd be a pullback and a recovery, and we would see this breakthrough over the coming months. We'll see it break out to the upside. If it does start to form that, that's good, but I would expect suspect reasonably after a big move like this, it's a bit exhausted and it does need to take a bit of a breather. We'll see. Though, however, Ethereum also performing well, hasn't quite broken through its bull flag, and I want to see it get out of it. A little bit of a range here that it has on the monthly. I want to see it get through that. So no signs of that just yet, but does look good. Any kind of a retracement this week, so possibly that's all it's going to be. We could see a best case scenario here where this week the markets just have a slightly bearish reaction to it, and then the media will kind of spin it as though maybe it's a response to, I don't know, to the sort of coup going on in Russia, when in actual fact the market is just technically very overextended. They've been very bullish the last few weeks and they need to take a bit of a breather, and maybe we could see this weekend or early next week, the week after, we could see the market start to recover from that and then start to continue or resume their moves to the upside. So stick with me and I will keep you kind of loopy in as we go through this. Otherwise, I want to wish you a fantastic week. I'm pretty much done for the markets right now. There's not a lot jumping out for me. I think currencies are still holding some good opportunities right now, and I'm just waiting for pullbacks on some of the really great quality stocks at this time.